I can see the participants starting to tick over, so we'll just wait another few seconds. Okay, good morning, ladies and gentlemen. Welcome to the 2021 AGM for Pureprofile Limited. My name is Andrew Edwards, and I will be chairing today's meeting. It is now just past 10 a.m. and there being a quorum present, I declare the meeting open for business. I confirm that the meeting has been properly constituted. In opening the 2021 AGM, I would like to introduce the board and management team of Pureprofile Limited, who are in attendance. Martin Filz, our Managing Director and CEO. Susan Close, who is one of our non-executive directors. Melinda Sheppard, Chief Operating and Financial Officer. And Lee Tamplin, Company Secretary from Automic, our company's share registry. Given the health concerns attributed to the COVID-19 pandemic, in addition to guidelines and restrictions issued by Australian state and federal governments, the company considers that it is appropriate to hold this AGM as a virtual meeting in a manner that is consistent with the requirements of the Treasury Laws Amendment Act 2021. The virtual meeting is being held via Automic's online meeting platform. This platform enables shareholders and proxy holders to participate in this live webcast of the meeting, as well as ask questions and submit votes. We hope. Further instructions to follow. Questions can be submitted at any time. To ask a question, press on the Q&A icon. This will open a new screen. At the bottom of that screen, there is a section for you to type your question. Please start your question by typing your shareholder SRN or HIN number. This will allow the moderator to identify you as a shareholder. If you would like to ask your question verbally, type your SRN or HIN and then type, "I'd like to speak." Once you've finished typing, please hit enter on your keyboard to send. Please note that while you can submit questions from now on, we will not address them until the relevant time in the meeting. Kindly include the agenda item number to which your question relates. Please also note that your questions may be moderated, or if we receive multiple questions on one topic, amalgamated together. We will do our best to answer any relevant questions raised, and to assist in being able to respond to as many questions as possible, I ask that you keep your questions short and to the point. When we reach the formal business of the meeting, voting on all resolutions will be conducted by poll. Shareholders attending virtually and wishing to vote on the resolutions being put to the meeting can do so through Automic's investor portal. If you are not already logged into the investor portal, instructions on how to do so can be found in the notice of meeting. A summary of these instructions can also be seen on the screen. Thank you, Lee. If you have already lodged a proxy vote, please note that you do not need to vote again through the online voting portal. Your votes will already be counted in a poll on each resolution as per your proxy instructions. If you have any problem registering your shareholding with Automic, please call the support number shown on the screen. To allow shareholders time to log in, I now declare the poll open. Online voting is now open and will remain open until I declare it closed at the end of the formal business. Your votes must have been submitted prior to the portal being closed for them to count. So the agenda for today's meeting will be as follows. I will first provide an address, a copy of which has been released to the ASX prior to the commencement of this meeting. The company's Managing Director and CEO, Martin Filz, along with our COO and CFO, Melinda Sheppard, will then deliver a presentation. A copy of this presentation was also released to the ASX prior to this meeting. Following Martin and Mel's presentation, we will proceed to the formal matters to be considered at today's AGM. And finally, there will be an opportunity for questions and discussions. So, as I just raised, firstly, it's my address. Pureprofile's vision is to deliver more value from the world's information. In a year when global events impacted everybody's personal and professional lives, knowledge was crucial. Pureprofile helped give insights and answers to our clients and the broader public. We experienced our best year in terms of client growth and satisfaction in 2021, resulting in the strongest revenue growth and cash position in Pureprofile's history. Throughout the year, strong demand for our technology and business model grew, which was reinforced by the impact of the pandemic. We proceeded to build on our strong business foundations and quickly developed new tools to meet changing customer needs. And our strategic initiatives helped Pureprofile position itself effectively for 2021 and beyond. This is evident by the fact the company is now operating in 7 countries and delivering insights across 93 countries. Pureprofile's financial results for FY21 exceeded guidance, with FY21 EBITDA of 3.1 million, up 124% year on year, and full year revenue was over 30 million, up 24%. And we've continued to beat guidance, posted another stellar set of numbers for the September 2021 quarter, with revenue uplift of 61%, an EBITDA improvement of 29%, and growth across all products and services year on year. We finished FY21 with a cash balance of 3.6 million, up from 1.8 million on the 30th of June 2020, and have continued to hold a strong cash position with a closing cash balance of 3.8 million as of the 30th of September 2021. We've continued to grow carefully our team under the direction of our new CEO and Managing Director, Martin Filz, adding industry experts who provide extra depth and skill to our leadership team and our board. Focus in FY21 was on recapitalizing the business reorganization, and forming a new focused strategy. And the work accomplished in the fiscal year 2021 helped support new clients, panelists, and overall business growth. Our new and improved product suite, which now includes our SaaS platform solution, Audience Intelligence, with its data analyst capabilities, has allowed us to organically expand our offering to our existing client base, with 91% of revenue coming from repeat clients, with an average client tenure of 4 years. And our newly formed Flybuys partnership continues to build each month. Martin will go into more details about our new business relationships, panel growth, expansion plans, etc. in his presentation. Our plans for global growth, though, are underway. We have opened sales offices in Singapore and in the Netherlands, adding crucial data and insights and media professionals to our global team. Through FY21, we recorded a 34% increase in customers from the United Kingdom, and 40% of new customers growth in the past year has come from outside of Australia. We rebranded our media arm, Pure Amplify, launched Pureprofile in the UK, and are well positioned to take advantage of the new cookieless world. Our strengthened talent pool has helped us meet the rigors of being a dynamic global data analytics and media company. We have achieved solid customer and revenue growth over the year, thanks to the talent and efforts of our people, who concentrated on delivering meaningful work to our customers. And Martin, again, will speak further about the quality of our people and the amazing efforts given by them over the year. And yet again, I also want to recognise Melinda, our COO and CFO, who played a key role in driving Pureprofile in the correct direction and managing costs throughout our restructure stage in FY20, and who has helped drive our excellent outcomes in FY21. A perfect partner for Martin, our CEO. From the rest of the board, and I would like to thank our staff for their efforts. We ask them to be open to new ideas, to be inquisitive, and understand that we are on a journey together, learning from one another at every step. And they've all embraced this opportunity. They are such a great bunch. They're a wonderful team, and I wish you could meet them all, because you'd love the experience. During the year, we also strengthened the board with the appointment of Albert Hitchcock as advisor to the board. Albert brings over 30 years of experience in digital product development and information technology. Albert is currently Chief Technology and Operations Officer at Pearson, the world's leading learning company. Previously, Albert held roles at BAE Systems, Racal Electronics, Nortel Networks, and Vodafone, where Albert held the role of Group Chief Information Officer. Finally, I would like to acknowledge the ongoing support of our shareholders, both long-term shareholders who stuck with us through the rebuilding stage and new shareholders who believe in our product mix and business model. I will now hand over to Pureprofile CEO and MD, Martin Filz, and Melinda Sheppard, our COO and CFO, who will provide a summary of the year's achievements and our key priorities and forecasts for FY22. Martin and Mel.
Thank you very much, Andrew, for the introduction. Thank you very much for the board and also for all the shareholders that have joined today and your ongoing support. It is clearly very much appreciated. I can't believe a year has almost passed since we were last doing this, and that was my first presentation on Pureprofile at the AGM, and much has changed. So if we move to the next slide, Lee. All right, what I wanted to talk about a little bit is what occurred during the last year. And whilst, as Andrew talked about, we have had stellar results, actually a great deal has gone on also behind the scenes. We talk a little bit, we use the phrase, it's similar to changing the wheels whilst the car is moving. And I just wanted to highlight a few areas that behind the scenes, we've made some changes. Thank you, Lee. So firstly, around the people. Firstly, we've appointed new members of my executive team, senior people that have come from the industry with deep knowledge and expertise and experience. We've also brought in new expertise across the business in both sales and operations. To give you an idea, we increased our overall headcount by approximately 10 in financial year 21, but we brought in approximately 34 people. So that gives you an idea of the changes that went on across the organisation. We introduced new ways of working. We've all embracing the new COVID ways of working, the working from home, the having virtual offices, actually being in office maybe 1 or 2 days a week rather than 5 days a week. And this call is actually a really good example of that. We have members who are in Orange today. We have members in the Northern Beaches, and Andrew himself happens to be in the UK at the moment. So as an organisation, it is really important that we're able to have the right systems, the right processes, and the right training of managers and the right people who can work in the new ways of working as we see in the organisation. And as an example, we just hired somebody in Brisbane to work in our Australian team, and yet we don't have an office in Brisbane. So with remote working come things like we've heard about being fatigued on using video, etc. So we've brought in Zoom-free hours, Zoom-free days, training for managers, training for people, new systems, new processes, which have all helped people to raise our employee satisfaction and to ensure people feel absolutely supported in the organisation. We implemented an employee share scheme. We defined our environmental, social and governance roadmaps, framework and policies. And we also rolled out a global learning and development programme. Alongside everything else that we do as a company to ensure our employees feel rewarded, feel like they have a voice and know actually their purpose within the company. Clients clearly our NPS score, Net Promoter Score, is very high, and this is because we listen to their needs. We have a proactive service and a proactive approach to our key clients. We develop clear return on investment for our clients and for ourselves in perhaps new ways of working. We focus on what they need today, and when we look at technology across the media and data and insight space, that's about quality, speed and innovation, and all clients are looking for that today. We've increased our account management team and increased our operations and support team, so again we can spend more time with those key clients delivering on their needs. Thank you, Lee. Partners are really important to us, and Andrew mentioned flybys as an example. So we've made working with Pureprofile very easy for any partners. Again, having standard processes, technology, contracts, etc. Delivering a clear return on investment there. So both we understand what we'll get from that relationship to put in necessary time and effort, development work perhaps, and in return also a client understands why they should partner with us. We today have a dedicated team in Australia and in the UK that is purely focusing on partners, and defined a clear offering for our partners around technology, branding and support. We look at Pure Amplify. We restructured Pure Amplify during the year. We rebranded that in about October, November of last year. We launched in the UK the Pure Amplify offering. And today, what I'm really excited about is we have 3 distinct revenue streams today that we didn't have last year. Number 1, working with end clients. Number 2, working with medium-sized media agencies where we execute their plans for them. And also a new one for us where we work with publishers who outsource all of their digital sales for their properties. And we have a couple of major publishers that we work with there. In the panel space, we've absolutely invested in our global panel growth. Wearing that global hat, we've restructured the panel team, bringing in new leaders, bringing in new leader for overall global panel and also customer service departments. We've launched in new countries that we didn't have panels in before. And also for all of our panelists, we've introduced new engagement for them that's seen a big lift in our existing panelists on the number of surveys they would do, the amount of time they spend with us, and also for our clients, clear and new quality checks and clear and new processes that give them confidence about the insights we deliver back. From a global perspective, we've had global offices. Andrew's talked about we have 7 today. We have 5 when I joined. But it's not just having a global process, a global office. It's about actually having global processes. So we've aligned processes across the organization. So both an employee and a client and a partner has exactly the same experience, no matter if they are in London, in Germany, in Netherlands, in Singapore, in Australia, etc. We've delivered localized technology, again, to enable all of our clients, partners and employees to have a seamless experience with us as an organization. We've opened those 2 new offices in Singapore and mainland Europe. And we've also increased our support and salespeople across the globe. So marketing now direct in the UK to raise our brand, ops in Singapore, Europe, and the UK, and sales in each country. So becoming truly a global organization. Thank you, Lee. From an operations perspective, we have a new global leader, Laurie, who's heads up our operations team, and again, bringing in place that clear global structure, global processes. We have new systems that brings us efficiency, brings clients speed. We've adapted processes. Perhaps an office, UK had a better process perhaps than Australia was using. And so we've adapted that across the organization. And we've upskilled the team, both in training, mentoring, and in bringing in new talent. Already a great team, and that's true across the whole of Pureprofile. And we've made sure that we've met that or raised the bar on that level. Legal and compliance, reviewing all of our privacy policies, our terms of service, our trade permits and trademarks, again, bringing in standardization, bringing in efficiency, bringing in consistency. Reviewed legal contract templates, updated our corporate governance policy, anti-bribery, corruption, risk management, whistleblower and security trading policies. And also bringing in a clear global procurement team that brings us across the organization. So a lot of work has gone on behind the scenes, and that'll sit on Mel's shoulders, who's sitting next to me. Our technology. So we have a disciplined approach to all of our technology investment, where we prioritize today absolutely on what is the business impact, how many clients need that or want that solution or going to use that solution, how will that bring us efficiencies across our terms if it's internal. We've established a new team, which is our product data and innovation team. And again, bringing in a new leader and new capability there. We are going and have been through the process of auditing all of our technology, and our leader, John Griffin, who's been with the company 5 or so years, but actually has been CTO for about 18 months today, has a really great philosophy, which is whether we buy, build, partner, as opposed to building everything. And that gives us the opportunity to bring in best of breed software. It gives us the opportunity of speed, cost savings. And that's one of the reasons why you see us developing much more today and proactively, whereas our capital expenditure on technology hasn't increased, but our output has increased. We're being laser focused, and we are buying, building and partnering where we don't have to do it all ourselves. And focusing clearly on eliminating the tech waste. So a lot is going on in our technology department, and that's a couple of years program that we have. And then all of our shareholders. We engaged with the IR department in April of last financial year, and that's really made a tremendous difference, helping us to understand a clear message that we're giving to the market, introducing us to new investors, institutions, brokers, etc., and bringing in regular investor roadshows that we now run, increasing the analyst, investor, broker awareness. We've brought in new investors to our top 20 list, and focus really, as I said, on defining the company messaging and the opportunity in the market. We have great news to tell, and it's about how we get that out into the market space. Thank you, Lee. So a huge amount has gone on behind the scenes. And why has a huge amount gone on behind the scenes? Well, the reason is it moves us towards our financial year 24 aspirational goal, which is aligned to our peer group financial margins. Let me give you an example. If I am a peer group company today established in our data and insights media space, typically, that's the black bars on the right-hand side, typically for every $1 of revenue, they would expect to see about 40 cents of EBITDA and about 15 cents of operating profit. When you look at us as an organization last financial year, for every $1 of revenue, we had 10 cents of EBITDA and 1 cent of operating profit. So by doing everything that I just talked about and more that we're doing behind the scenes, we expect by the end of financial year 24 to be much more aligned to our peer group. And that is why in every quarter of our numbers that you see, actually our EBITDA line and our free cash line is actually growing faster than our revenue line. More dollars, more cents are flowing through the organization because we are being a better company. So our teams are absolutely aligned and committed to this continuous operational improvement so that we drive margin growth across the company. So I'm really, really excited about this. And again, a huge amount sitting with Mel and her team, giving the reports and the data back to the company. Thank you, Lee. So, what is the opportunity? Thank you. So I specifically here, because I'm conscious of time, wanted to just talk about the data and insights opportunity around the world today. So on the right-hand image, you can see the space that we sit in, about 75%, that's the purplish bit, and the green part of the ring sits within the space that we operate. So that data and insight space, about 75% is relevant to us as an organization. On the left-hand side, it's about a $89 billion industry around the world, of which $48 billion sits in the US. 9 billion, this is all US dollars, 9 billion US sits in the UK, so 54% in the US, 10% in the UK, and then 18% is in the rest of the world, the established markets. And that's where we sit. 60% of our revenue today comes from Australia, and so 60% sits in the 18%. And this is our big opportunity. It's really in replicating exactly what we're doing in Australia into our other markets where we already have either an office or a footprint that we conduct research and insights or data and insights today. Thanks, Lee. So to drill down on this a little bit further, we can see on the left-hand side table, you can see Australia sits in 8th place. So our market in Australia for data and insights is $753 million US dollars. And then just to bring your attention to numbers 1 and 2. So the UK market is approximately 14 times bigger than the Australian market. And the US market is over 40 times bigger than the Australian market. So by being already global, by being already having a presence, clients and a brand in these other markets, this is where our biggest opportunity sits. And why I talk and Mel talks in many of our presentations that you may have seen us do, talking about that global opportunity. It is now time for Pureprofile actually to start to realize this. And to give you an idea, on the right-hand side, where we have the most established office, we have over 15 people, we have a number of clients, as we talk about Data and Insights UK, in excess of $12 million today, just in Data and Insights in the UK office. We've got the UK market on the right-hand side. So what we can see, this is from another set of reports, but broadly saying the UK market has grown 40% since 2016. The top 100 agencies themselves are generating $3.8 billion. We see 4.8% growth in those top 100 markets. Over 4,000 enterprises are engaged in the business of evidence. So that's understanding insights, possible clients for Pureprofile. And it's a market that employs 64,000 people in the UK. So a fantastic opportunity that, as I said, we already have a presence, but an incredibly low market share. Thank you very much, Lee. So finally, to look at the opportunity, what are a couple of industry trends? So firstly, privacy. Privacy is driving advertising much more to the need for first-party data. We've got Apple tracking. If you use an Apple phone, you can now opt out of being tracked in your Apple phone. Over 95% of people have opted to do that. And you see that already impacting companies on the US stock market, such as Snap, for example, who used to use that data and that methodology for their revenue. Google have announced that in next year we will move absolutely to what's called a cookieless digital world. So today, 90% of all planning or advertising that's delivered by for your experience when you go to a website is delivered by using a cookie in the background. So that's I went to Google, searched for a bicycle, and a second later I'm on an Australian site and I'm seeing bicycle ads. That's called programmatic advertising. That stops in the middle of next year. A couple of impacts. Firstly, publishers are going to need to generate their own first-party data rather than rely on the cookies from the big publishers. So Facebook, Amazon, Google, where over 66% of all advertising today comes from. So they've got to build their own first-party data. That's an area we already work with News Corp in Australia in doing exactly that, and have been doing that for a number of years. So we're really excited about rolling that out to other publishers. And also advertisers and agencies need to start to do their planning from using programmatic, that cookie world, to actually first-party data. And again, all of our Pure Amplify planning is done today across that methodology of first-party data. And we're advising people like the IAB, major advertisers, major platforms on exactly how they can do that. So this is a tremendous opportunity that is both in our data and insights and in our Pure Amplify space. There's also, again, just in data and insight space, a huge amount of market activity as organizations and companies realize the importance of data today in helping brands to make better decisions. And a couple of ones I just wanted to highlight here, Cint, C-I-N-T, who's publicly listed on the Stockholm NASDAQ. They just bought Lucid, I think it's a week before last. That's a US-based company. Both in our space, slightly more technology-led than we are as an organization, but we're clients of them and they're clients of ours. Cint bought Lucid, that was 70 million of US revenue, 7 million of US profit, and they paid $1.1 billion for that. I will pause at that moment. 70 million US revenues, what's that about? 90 or so, 100 is just under of Australian dollars, and they paid $1.1 billion. At the other end of the scale, another example that I've got here is Cint actually bought a small German company, panel company, data and insights company, very, very similar to Pureprofile, but purely in Germany. You could say we are, as I've said, 60% in Australia. Gapfish, 8 million euros, of annual revenue. So again, smaller, about a third-ish the size of Pureprofile, 1.3 million of profit, and they paid 28 million euros. So about over three times revenue for Gapfish, which was purely a German play. So it gives you an idea across those two scales of the opportunity that and the latencies that's sitting in Pureprofile market cap today. Overall in our space in the last 12 months, acquisitions in our space There were 121 globally. That equaled nearly $23 billion US of acquisitions. And there were 21 investments equaling about $3.5 billion of US dollars. That's from a report that recently just literally came out from a company called Green Bookers in our data and insight space. So huge amount of focus, huge amount of insights, and huge amount of focus, huge amount of interest in the data and insight space today. And then to call out a couple of peer group examples. So YouGov is a good example of a larger version of us as Pureprofile. So their full year is about £169 million of revenue, £19 million of profit. When you look at their returns, you can see they're sitting within roughly that 40%, 15%. They saw 18% growth last year. We saw 24% growth last year. Their market cap is 1.46 billion. So that's approximately 10 times at the revenue level. And then Cint, there's some quarterly numbers there. Cint is a pure data and insights company. Their PE ratio is 175 today. And I was looking online, Tesla, I think, is over 200. People like Google, Facebook, etc., are down in the 20s, 40s. This is a hot space. Thank you, Lee. And the next slide. And with all of that in mind, that's why this is our strategy. And this strategy we put in place in September of last year, and it fits to the market and it fits to our clients. Number one, grow globally, expand out of Australia. We've already got the global structure around the world, operations, a center out of India, local offices. So grow that global business and deliver what we're delivering to Australian clients in other markets. It is exactly what they want. Win that low market share from our competitors. However, the second point, grow out our SaaS platform, grow out the technology, lean into that, wanting it faster, wanting flexible results in a timely fashion. And we've launched some really exciting products this year. We talked about audience intelligence in other presentations, and just won a very important award, the Australian Business Award, in July of this year. So improving our client-facing technology and leaning into that always-on SaaS technology. And what does that mean? If you've delivered those two, then we can grow our data and insights and our media advertising teams. Thank you, Lee. And this isn't that we're having to do this all from a standing start. As Andrew mentioned, 5 offices around the world today. We have offices in 7 countries. We have 720 clients. I think when I joined and we were doing the recapitalization, we were talking about 650 clients. So we've increased to 720 clients, 165 staff again, but changed and brought in a lot of new people behind the scenes. 29.4 million revenue comes from our repeat clients, and we've now got $5.6 million in that annuity revenue as we grow out that repeatable SaaS revenue. So this is about expanding into where we have a footprint. And as an organization, the next slide, Lee. Oh, back one. As Andrew talked about, this isn't new to our clients. We delivered last year data and insights and campaigns in 93 countries in the last 12 months. So it's about growing that out, focusing on that and monetizing that even more. So with that, thank you all very much. I will hand over to Mel.
Great. Thank you so much, Martin. So if we just go on to the financial highlights, Lee. First slide. Great. So how did we go in FY21? Well, no doubt you've all seen our annual report. We had a fantastic year. I was really proud of our performance in FY21. Our revenue for the year was $30 million. which was 24% up year on year. Our EBITDA was 3.1 million, which was 124% up. And we had a really strong operating cash flow at 2.4 million for the year, which was $1 million up, or 65% up year on year. And we had strong growth across both the APAC and the non-APAC regions, being the UK, the EU, and the US. Really pleasingly, we launched our audience intelligence product in April, and we also launched our Flybuys partnership in April, which really bolstered our SaaS platform revenue, which was 1.1 million for the year, which was 119% up. If you go to the next slide, please, Lee. We had a fantastic start to Q1. Again, really pleasing. Revenue of $10.2 million for the quarter, which was 61% up. EBITDA at 1.1 million, which is 29% up. And again, really strong operating cash flows. So not only is the revenue growth and the EBITDA growth at the top line progressing really well, we're seeing it translate through to our cash balance, which is fantastic as well. How do we go across the different business unit revenues? So we were up on every single product and service that we provide to our clients. So APAC was 39% up. The UK EU for our data and insights business was 57% up. Our SaaS platform was nearly 300% up. Our Pure Amplify businesses in both Australia and the UK were up 137% and 27%. When we look at EBITDA, whilst we don't normally report on normalised EBITDA, we thought it was really important to let everyone know about the impact of COVID and JobKeeper in the prior year. So FY21, in Q1, we did receive JobKeeper, and we did actually have many in our team were on reduced hours or pay cuts over that first sort of initial period of COVID, while we were really trying to understand what was actually happening to, I think, externally and also to our business. So a fantastic start to the year. And we also wanted to give you, if you go to the next slide, Lee, a snapshot into how we're going in Q2. So we've just hot off the presses finalised our October results. Our revenue for October was 3.5 million, which was 40% up. Again, we've seen growth a lot across all the business unit revenues. And what's really pleasing is our strategy of growth, global growth outside of Australia, is really coming to fruition now. You can see that we had 84% growth in revenue outside of Australia. Now, that was driven, you can see here, by the data and insights business across the UK, and the EU and the US was up 81% for the month, which is a fantastic result. Again, the strong growth in the SaaS platform revenue for the month at 324, and then our Pure Amplify businesses in both Australia and the UK were up 17% and 21%. So a really fantastic result for that. And we're also really pleased to advise you about our full year EBITDA guidance of $4 to $4 million for the full year. Now, that effectively has growth of a range of growth of 27 to 40% year on year. So if you might recall from the first slide that our EBITDA for FY21 was 3.1 million. So we're expecting growth between 27 and 40% at this point in time. But as we go through the year, we'll obviously adjust that guidance. Next slide, Lee, please. So just a quick, some snapshots of our trends. So you can see here, obviously the restructuring and the cost savings that we've made since FY18 in the business have improved the EBITDA over each of the financial years. But what's really pleasing to see is the top line revenue growth is now really building over the last 18 months for the organisation. Next slide. And the trends here, so you can see again, the same trends that you saw from a financial year perspective, you can see over the quarter as well. Really strong growth from FY21 to FY22, whereas previously the growth was relatively flat for most of the product revenue lines. Next slide. And really importantly, you can see here, this is actually our operating cash flow. So this is per the 4C definition. You can see that the revenue growth that we've had is really translated to strong growth in cash receipts. So you can see from Q1 FY21 to Q1 FY22 growth of from 6.2 million in cash receipts to 10 million. Obviously, our cash outflows have gone up at the same time, but we are improving our operating cash flow each quarter, which is a fantastic result for us. And then the final slide from me is really regarding our CapEx investments that we're making. You can see, if you've listened to me with some of the webinars we've done previously, the company did used to spend a lot of money on CapEx expenditure. If we kind of went back even further beyond FY18, that would have been a much higher number. We've now normalised it around 2 million to 2.1 we think that we'll probably spend this year. We've got a much more disciplined approach to what we're investing in. And then really the investment focus at the moment is really aligned to our corporate strategy. So that's it from me, and I'm going to hand back to Martin to go through our operating highlights.
That's great. Thank you very much, Mel. We couldn't do this without you, Lisa, so thank you very much. So a couple of operating highlights just to talk about. Thank you, Lee. So 18% of the ASX 200 today uses us. Here are just some new organisations that start to use our insights or Pureprofile services in Q1, and it's many brands that you recognise. So as Pureprofile, what's really important, we are a trusted brand to either under Pureprofile deliver results for a client, and or under our data and insights banner to deliver trusted insights on clients' consumers. So that is very exciting as we add to those clients. Thank you, Lee. Just to highlight a couple of things that we track and that are important to us. Firstly, our client, bottom right, our client net promoter score at 83. Anything above 72 is world class. 83 is really tremendous. And what does that mean? Clients like what you offer and they keep coming back. One of the biggest reasons that they do that is the middle one, 86% employee satisfaction, which was up 14% on the prior year. For us, our team is everything, and to invest in our people, ensure that our people enjoy what they do, how they do it, are given the right tools, the right systems, etc. Anything above 78 in an employee satisfaction score is again world class. And as I say to many of our shareholders that I get to talk to, I had to say you should also talk about, ask this to all of your investments, because when you see employee satisfaction high and client satisfaction high, revenues follow. If either one of those are low, then revenues will start to head south as well, and also your costs can go up because you're falling behind on employee satisfaction, and therefore you're having to replace more people, etc. So two really important metrics that we ensure through our reports and through servicing that we do, that we make sure both of those numbers are high by delivering what our people and clients want. So that's two important metrics. The other important metric we look at is 2.5 million in revenue came from 124 new clients outside of Australia. As Mel just talked about, our October numbers that show that we are adding clients around the world and adding revenue around the world outside of Australia, which is really important. The next metric, 5.6 million of data and insights revenue, is annuity revenue. So that talks to moving into the SaaS world, repeat revenue, repeat business, and again, changes us as an organization. And 298% quarter-on-quarter revenue growth from SaaS clients. So just a few metrics that we absolutely focus on as a company, and seeing all those going in the right direction. Thank you, Lee. So a couple of things to note coming up. Thanks again, Lee. So when we look at Q1 financial 22 global business, so our panelist data sources outside of Australia grew over 100%, 721k new clients in that quarter from regions outside of Australia, and 59% growth in total revenue from regions out of Australia. So again, our reports, our metrics are showing that we are delivering on our strategic plan. More data, more insight. So existing partnerships data, that volume increased by 42% the more data you've got, the more you work with partners, that directly correlates to an increase in revenue. And we've got an ongoing discussions. We've got two people dedicated now purely to international partnerships, and there's a number of those in progress. Can't talk about them today at the AGM, but hopefully we have some news soon. And self-service, audience intelligence, important new product for us. So we launched food delivery, and you know we added Uber Eats. Fast food retail industry solution we just launched a couple of weeks ago. Technology sometimes takes a little bit longer to develop. Just launched that. We have over 14 trials today, or we have 14 trials today running in audience intelligence, and our new leader Sorley joined at the 1st of August. So very excited about the future of that as a solution as we look to expand that in Australia and roll that out in the UK. Next slide, Lee. So what are our key initiatives for financial year 22? Well, develop new partnerships. It gives us scale immediately in a new market. It gives us immediate data points. As I just said, we can increase our revenue, so increase existing global audiences, allows for more insights to be generated and for more clients, and increases our revenues and profitability and gives us immediate step change. So actively looking in Asia, US and UK today for partnerships that give us exactly that. Launching new verticals for audience intelligence. So as I said, it's a world first. We have some patents that we're applying for in the solution. It'll take time because the majority of our revenue still comes from data and insights and media. So it'll take time to move the needle, but this is an absolutely important solution for us. And as I said, hopefully you'll see some new brands when we talk about this quarter, after the quarter closes, so in January. Global business growth. So as Mel just talked about, we saw the growth outside of Australia. So that's to expand our opportunities by growing our businesses, especially in the UK. It's the same language. We know it's a big market. I just talked about that. We have existing clients, existing branding. That's the easiest one and the most cost-effective one for us to grow out of. And fortunately, the second largest market globally. So that investment will see further sales capability, new panels that we're launching out, and then that attracts new clients and revenue in the region. And as I talked about at the beginning, all of our operations and systems ensure that somebody can have the same, a client can have the same experience, or a partner can have the same experience, no matter what country they're in. And then corporately, so we're just rolling out internally our 3-year strategy and plan. That's the first time the company's ever looked that far ahead. So we're really excited about that. That's why we're able to talk about that goal of 40% EBITDA, 15% operating profit, because that's a key part of the 3-year plan, apart from revenue growth. And exactly what does that look like? What countries do we need to be in? What teams do we need to have? Where will we have partners, etc. So that's the first one. Second one on our corporate one, and this is because our market cap is now growing, we're able to start looking at acquisitions. So where we can look at smaller versions of Pureprofile, especially in the data and insight space, and we can start to aggregate smaller companies that give us an immediate step change into a market. It brings us, it accelerates that 3-year plan. It brings us clients, it brings us team members, brings us revenue, and it brings us profit in any market. And it's very easy now because we've done that work behind the scene in standardizing everything. It's very easy for us to now bring in a third party or a new acquisition and actually ensure that from day one we start to see synergies and positive outcomes for both us and the acquired company. So we can start looking at that. And then also continue to attract new institutional investors, so that complements all of you, our existing shareholders, and starts to move the needle for us as Pureprofile. So why do we do that? Because long-term sustainable returns to all of the shareholders and ensure that we can grow our market capitalization, and then that becomes a self-fulfilling prophecy and you can accelerate growth even faster. Thank you, Lee. So in summary, we're demonstrating strong growth. We are really focused on remaining cash flow positive. We don't want to use any of the cash in the bank that we have today for keeping the lights on. And that's either for investments that accelerate our 3-year plans, or perhaps acquisitions. We've got some really exciting solutions, proactive solutions that we're now developing, really highly engaged employees, and that straight away results in satisfied clients and loyal clients. Clients want to work with smiling, happy people who are being proactive and passionate about what they do. So really enjoying Pureprofile, great place to be, and thank you all for supporting us. And with that, I will hand back to Andrew.
As I've said, Martin, you're always smiley and happy, so that's great. A great presentation and a great result. So absolutely phenomenal. So well done, Martin and Mel and the rest of the team. We now come to the more formal business. So it's the notice of the annual general meeting and proxies. There will be a pause between sections for me to see if there are any questions that have been sent via the Q&A, and if they're appropriate to this section, the section that I'm in, then I will obviously answer them as best I can. So we now move to the formal business as set out in the notice of meeting. The notice of annual general meeting was mailed to all registered members on or about the 8th of October this year, and is to be taken as read. An addendum to the notice of meeting was also mailed to all registered members on the 29th of October 2021 and is also to be taken as read. Voting on all resolutions will be conducted by poll. For the purpose of the poll, I appoint Adrienne Atkinson of Automic, the company's share registry, who have examined and prepared summaries of the proxy forms received, to act as returning officer and to conduct the poll. Shareholders in attendance virtually that have already submitted a vote by proxy should note that your votes will already be counted towards the poll. You do not need to lodge another vote unless you wish to change your proxy instruction. Shareholders in attendance virtually that have not submitted a vote by proxy and wish to vote on the resolutions being put to the meeting today can do so by registering your shareholding with Automic. Instructions on how to register your holding were provided in the notice of meeting and can also be seen on the screen. As advised earlier, online voting is open and will remain open until the poll is declared closed. Your votes must have been submitted prior to the poll being closed for them to count. Okay. Proxies have been inspected and all those valid lodged have been accepted. Proxies have been received representing 154 million odd shares, about 14.1% of the issued capital of the company. All undirected proxies or open votes that have nominated the chairman of the meeting as their proxy will be cast in favour of each resolution in the notice of annual general meeting. We will now proceed to the resolutions set out in the notice of annual general meeting. Financial statements and reports. The first item of business is to receive the company's annual financial report for the year ended the 30th of June 2021. The financial report and the reports of the directors and the auditors are now laid before the meeting. There will be no vote on this item and is a discussion item only. The company's auditor for the 2021 financial year, Simon Colton from Grant Thornton, is present to take any questions relevant to the conduct of the audit and the preparation and content of the independent auditor's report. Are there any questions or comments on the financial report or the reports of the directors and auditors? There's no questions directly related to that. Are there any questions or comments on the management of the company? Okay. Are there any questions relevant to the conduct of the audit and the preparation and content of the auditor's report to be put to the auditor? We have had some questions, but not specifically addressed to the auditors. So we will now proceed to the resolution set out in the notice of the annual general meeting and the addendum to the notice of annual general meeting. For those voting on the resolutions online, you're advised not to submit your vote until you have selected your vote for all resolutions. Resolution 1, adoption of the remuneration report. Resolution 1 is as follows: to consider and, if thought fit, to pass with or without amendment, Resolution 1, adoption of the remuneration report as an ordinary resolution. If you wish to discuss this resolution, please submit your question via the Q&A. We have some questions regarding the amendments to the executive rem and the changes to the resolutions. After careful consideration, the board amended the FY22 executive remuneration packages, which you know. The board will be meeting and reassessing the executive remuneration for the group over the next few months with the help of external partners to greater align with our amazing growth across all products and geographies. The proxies received in relation to this resolution are on the screen. I now put the motion and note that shareholders can vote via the online portal. Resolution 2 is the re-election of Sue Close as director. Resolution 2 is as follows: to consider and, if thought fit, to pass with or without amendment, Resolution 2, the re-election of Sue Close as director as an ordinary resolution. If you wish to discuss this resolution, please submit your questions via the Q&A. Okay, no questions there. The proxies received in relation to this resolution are on the screen. I now put the motion and note that shareholders can vote via the online portal. Resolution 3, ASX Listing Rule 7.1A, approval of future issue of securities. And consider, and if thought fit, to pass, with or without amendment, Resolution 3, ASX Listing Rule 7.1A, approval of future issue of securities as a special resolution. If you wish to discuss this resolution, please submit your questions via the Q&A. Okay, there are no questions. The proxies received in relation to this resolution are on the screen. I now put the motion and note that shareholders can vote via the online portal. Resolution 4, ratification of prior issue of options. Resolution 4 is as follows. To consider and, if thought fit, to pass with or without amendment, Resolution 4, ratification of prior issue of options as an ordinary resolution. If you wish to discuss this resolution, please submit your questions via the Q&A. Okay, there are no further questions. The proxies received in relation to this resolution are on the screen. I now put the motion to and note that shareholders can vote via the online portal. Resolution 5, ratification and prior issue of employee options. Resolution 5 is as follows. To consider and, if thought fit, to pass with or without amendment, Resolution 5, ratification of prior issue of employee options as an ordinary resolution. There are no questions. So the proxies received in relation to this resolution are on the screen. I now put the motion and note that shareholders can vote via the online portal. Resolution 6 to 9, an announcement to the ASX on 29th of October 2021, and as per the addendum to the Notice of Annual General Meeting, which was mailed to all registered members on the same day, Resolution 6 to 9 from the original Notice of Meeting have been withdrawn. Resolution 10, approval of issue of LTI options to Martin Filz. Resolution 10 is as follows. To consider and, if thought fit, to pass with or without amendment, Resolution 10, approval of issue of LTI performance rights to Martin Filz as an ordinary resolution. If you wish to discuss this resolution, please submit your questions via the Q&A. There are no questions. The proxies received in relation to this resolution are on the screen. I now put the motion and note that shareholders can vote via the online portal. This being the final resolution to be voted on today, I remind those shareholders voting online not to click on next until you have selected your vote for all resolutions. That concludes the resolutions to be voted on today. As noted, we are conducting a poll on all resolutions. I note the poll is already open. Can all shareholders voting online please now ensure that they have submitted their votes? I will allow another 30 seconds before the poll is closed. If you have any questions in relation to the submission of online votes, please send them through the Q&A function now. We have some other questions that didn't necessarily fit in any one of those categories. So I suggest that we leave the poll open and we answer some of those questions now. Have you seen some of those, Martin? Some operational ones?
Yep, yes, I have. So whenever you're ready, happy to answer those.
Okay, well, why don't you start with the question about the resourcing and support functions around the executive team, I suppose.
Yeah, that's great. To start off with, I'm actually going to hand that over to Mel, who make a couple of comments on that one.
Yes,
yeah.
That's absolutely a great question, and it's obviously something that's really important to make sure that we can execute. I think that's been part of the challenge with the business in prior years, and specifically when I first came in 2018, we were quite challenged in execution. There's a couple of answers to that question, though. I think the first one is we really try and forecast out and understand what we need from a resourcing perspective based on our revenue forecast. We understand exactly from an operational perspective what we need to deliver to make sure that we're servicing our clients effectively, etc. We've also, obviously, when Martin went through the journey, we've been doing a lot around making the business more efficient and more automated so that we don't have to continually put on more resources to deliver the same dollar of revenue as we may have 18 months ago. So we're very heavily focused on our business strategy, delivering that business strategy, and being very clear about what we need to execute on, and making sure that we're not spending a lot of time on things that actually don't move us towards that strategy. So we do believe that we're adequately resourced. Part of the 3-year planning that we're doing also tells us what sort of level of resourcing we will need in 3 years' time in all functions, whether it's operations, HR, sales, etc., to deliver on that strategy. So yes, there's a lot going on, but we feel really comfortable about where we are and what we need for the next couple of years to deliver on our corporate strategy and 3-year plan.
I should have read the question so everybody's aware, but the question is, there's clearly a lot going on within the business. Is the company adequately resourced, specifically in terms of support functions to facilitate the changes in the way that considers and accounts for the execution risks? So the other thing, that helps with that, of course, is Martin's point about our net promoter scores and our staff satisfaction surveys. And of course, it used to be only a year ago nobody wanted to work for Pureprofile. Now most people do want to work for Pureprofile. So, we can attract the right talent, and it's a lot easier to employ. So it's a big turnaround.
Sorry, Andrew, I was just going to add to Mel's point. The 3-year plan is incredibly important to us, but it's also that we have a considered approach to our expansion. It's why, for example, we are looking to the UK first before we actually start to look at the US. And we do about $2.5 million or so from the US at the moment. It's a big market. You can spend a lot of money, a lot of resources, a lot of time to not make much noise. And we want to make sure we first invest and grow out the UK business. That is then established, and then we can look to the US. So exactly to Michael's question, we're trying to avoid execution risks. So thank you for the question, Michael.
Okay, we've got a few more questions to go, but there being no further questions on the resolution, I've been told to declare the poll closed. The staff at Automic will now process the poll, and the results will be announced to the ASX once they're available. So that poll closed being, 13 minutes past 11? Sorry, I'm in the UK. I'm just looking at my clock here. It's 12:15, but yeah. So Lee, yes, you can work on that time. All right. Yeah. So how many direct reports do the MD/CEO and the CFO each have?
Yep.
Over to you guys.
I have 6 direct reports.
And I have 4 direct reports.
So we try to balance different functions and roles in the company between both of us, leading to our, our skills and our expertise.
Okay. Okay. This question, 2 general questions, please. One, could you please give a couple of examples of the peers you benchmark to for page 7? And second question, with Q1 up 60% and October month up 40%, your up to 4.4 million EBITDA guidance indicates a flat EBITDA percentage. So should we expect that followed by margin expansion in FY23 and 24?
The first question first, the easiest peer group example with the most data available to it is YouGov, listed on the UK stock market. You can see their journey as a company, where they've rolled out additional offices, additional countries, their technology, their mix of technology to operations is similar to ours. They don't have a media arm, and they're not as sophisticated in their SaaS products as we are, but that's a really good example to be able to go deeply into. And again, you can see their journey from a shareholder market cap experience as well. So that's a good one to use. And then for question number 2, I will hand over to Mel.
Yeah, so the question really around the EBITDA guidance indicates a flat EBITDA percent, which I'm assuming was really, the question was, what are you seeing from a margin perspective, and should we expect that followed by a margin expansion in FY23 and 24? The answer to that is absolutely. From one of the slides that Martin presented at the very start when we talked about our journey and why are we making all the operational changes to the business. And that's so that we can scale as an organisation. So as we grow our revenue over the next 2 financial years, that we want our margin to expand more in line with our peer group. We will see our EBITDA margin grow slightly this year. The guidance that we gave of $4 to $4.4 million, if you recall what we did during FY21, we gave EBITDA guidance of 2.5 million at our AGM. And then as we went through the year, we upgraded that guidance, and we expect to do a similar thing this financial year as well. And yeah, so the response to that is absolutely we're expecting margin expansion, and that's really a key, I suppose, key milestone for our 3-year plan for us as well.
Okay. We have one last question here, which is Martin, I think this is most probably in your space, but anyway, we can reference to growing by acquisitions. Given the evidently lofty elevations of companies in this space, how will the board avoid overpaying for assets?
Again, a really good question. Look, we can achieve all of our aspirations through organic growth over the next couple of years. However, a strategic acquisition, gives us the ability to accelerate that. And so, the view is we need to make sure that any acquisition we make makes sense for the business strategically, and also makes sense for our shareholders today. And that might mean there's some acquisitions that look good, but actually we'll have to pass on. So it needs to fit the company, and it needs to fit the company expectations. So there's a balance.
Yeah. I think that's absolutely right, Martin. And the other thing then is, you know, we're constantly having conversations around our own, you know, our own valuation and multiples of that, be it on EBITDA or revenues, and that's what we use in the first instance to any conversations. But you know, it's to reiterate what you said. We're not aggressively going after acquisitions because our organic growth is absolutely amazing at the moment.
Spot on.
Okay, as mentioned earlier, we now have the opportunity for any other questions of a general nature. I mean, we've been through questions of a general nature, but I now invite shareholders to ask any question of general nature, and you can do so by submitting them through the Q&A. I'll just leave that for a few seconds. It doesn't look as if there's any other question. Oh, hang on, no. There is one question that's come in, which is, please comment on the level of engagement of the board with the operational execs. Both Sue and myself have a more than weekly dialogue with Martin and Melinda, and then as required, obviously filtering through them, we have a dialogue with the operational execs as required. So we have a good relationship. It's not overpowering, but it works well. I think that whole process works really well. So, you know, I think that whilst Martin's built a great team, the team is in a great place because, you know, he's a great leader, but also I think that, you know, Martin and Mel has the support of the board, and his execs know that the board supports Martin and therefore them as well. So it filters down. So it's yeah, I think it works well. So we're always available, yeah, it's a healthy relationship. Martin, you can talk more about that if you want.
Yeah, I think also you downplay it a little bit, Andrew, because I've never worked with a board that makes itself so available as you, Sue, and Albert also does. I mean, you know, Sue gets involved with workshops within the teams and has an especially close working relationship with Joe, who heads up marketing for me. Andrew, you're over in the UK at the moment. You've met with all of the team. You've met with some clients. You've met with potential and new shareholders in the UK as well. And Albert, who brings the really technology background to us, has met with our CTO John Griffin and is available feedback. So no, as you said, it's not overpowering, but absolutely the board is there, and we're able to leverage contacts and experience and knowledge as we need to. So a huge thank you from Mel and myself and everybody in the team to you and the rest of the board. You and Albert, it's fantastic.
No, thank you, Martin. One other one, are you looking to build out the board as needed? I think the thing is, the board is small, which is good. We don't want to waste money on having a larger board, but where we have a gap within our expertise, so for example, we didn't have the real high-level technical experience on the board, then Albert, filled that in as an advisor. So But outside of that, you know, at the moment we're I think we're quite happy where we are, but you know, things change and we'll see. But Albert's just an advisor at the moment, so we'll see how that pans out, because you know, it will be nice to get that more permanent, should we say. But nothing that I know of at the moment. So we don't have any more questions, so I'm going to draw a close. So as I mentioned earlier, we will now have the opportunity. Yes, I now invite shareholders questions. We've done that. There are no further questions. I'd like to thank everybody for their attendance. And as advised earlier, the results of the polls will be announced to the ASX once they are available. Thank you, Martin and Mel, for your presentation. Thank you, Lee, for your slide control. Adrienne, for your technical ability in terms of making Zoom work. Julia from the IR department. Simon from Grant Thornton. Thank you all for your attendances and input. And thank you, obviously, to all of our shareholders for your support throughout this journey. And it has been quite an amazing turnaround. And you know, when I think, you know, when I had my first coffee with Martin and just reached out to me over LinkedIn, and you know, I said, well, you know, we're nowhere unless, you know, the recap happens, and it happens well, and then we'll just have to see. And here we are. You know, what an amazing place to be. So I really think that the world's our oyster, and we've got something very special here. So anyway, thank you all, and we'll chat again soon, I'm sure. Thank you.